Well, a lot of attention to the ability of members of Congress to trade stocks, but we did hear from House Speaker Nancy Pelosi earlier today suggesting that she would be open to negotiation on a bill that would ban stock trading, not just by Congress, but also across other areas of government as well. Joining us now for a little bit more commentary on this is Representative Jake Auchincloss, a Democrat from Massachusetts. Congressman, it's great to have you on the program this afternoon. Just want to begin there. We've heard the House Speaker at times say she wasn't open to a type of ban like this. A lot of Americans are wondering, why is this not already illegal? Simple question here. Do you expect this type of bill and this ban to finally get done this year?
I think it should. I've been clear from the beginning that to supplement the already rigorous disclosure requirements that members of Congress have for their individual holdings, we should also have a ban on members of Congress owning or trading individual public equities. I think that the public's perception that members of Congress or other federal officials might have insider knowledge and might be able to gain on that insider knowledge is an unacceptable diminution of the trust that they could have in this institution. And right now, trust is the most important currency in our political sphere.
Well, the House Speaker seemed to suggest that she wants that extended beyond lawmakers, saying that this should also apply to the judicial branch, extending to the Supreme Court. Essentially, all branches of government need to be bound by the same regulation or same rules. Is that something you agree with?
I certainly agree that people who hold tremendous public trust, whether they're Supreme Court justices or senior administration officials or members of Congress, should be held to a higher standard, and that part of that comes with sacrificing your ability to own public equities. I think that's fully appropriate. And again, it comes back to trust to me. Unfortunately, the public's trust in our critical democratic institutions is really at an all-time or at least a post-war low. And that makes it so much harder for us to pass policy. That makes it harder for us to address issues in public health or climate change. It makes us harder for us to lead on the world stage. Anything that we can do that will increase the public's trust in the federal government, I think is an important step forward for us as a country, and a bipartisan one, I would add.
Congressman, I want to switch gears to the issue of stablecoins. You are on the House Financial Services Committee. You're the vice chair on that committee. There was a recent hearing that kind of looked at the president's working group's conclusions about a potential framework for how the federal government should be regulating stablecoins. Just any thoughts on that? Were you satisfied with the report? Does Congress have to get involved here to set up a framework by which the financial regulators need to be policing this?
Yes, Congress needs to be involved. This hearing was the second in as many months. That really was a substantive deep dive into cryptocurrency, and in this case, particularly stablecoins. And I continue to be impressed by the thoughtfulness of the questions, really from both sides of the aisle, and also by the thoughtfulness of the witnesses, whether it was industry witnesses from December or the undersecretary from yesterday. People are thinking about this, I think, in the right way, and I'm optimistic that we can have bipartisan, well-scoped, thoughtful legislation. And it really, we got to be thinking about stable coins in particular with three domains. The first domain is prudential risk, really in particular, run risk, reserve volatility risk, payment system risk. And there, we actually have a clear and present next step. We should have a rigorous registration, audit, and disclosure set of requirements for stablecoin issuers and for their custodians. Industry wants that, the administration wants that, Congress wants that on both sides of the aisle. That just makes good sense. If you are saying that this token represents $1, you had darn well better be able to prove on a recurring, transparent basis that you have that dollar, and you should be insured for it, and you should be audited for it. But then there's systemic risk. There's this idea, well, would any risks that are happening within the stablecoin ecosystem potentially spill over into the real economy? As the undersecretary said yesterday, and as the PWG really emphasized, the systemic risk is quite modest at this point for stablecoins. It's just not that big a part of the real economy, and there's a pretty robust firewall between the crypto and the real economies right now. This is not like housing in 2008, where it was really undergirding so much of the financial and real economy systems on top of it. Having said that, the FSOC should be continuously monitoring systemic risk, reporting on it to Congress, and if necessary, raising flags that say, hey, we do need to address this, and maybe we do need to tag some of these stablecoin issuers as globally systemically important institutions and regulate them thereby. And then the final point I'll raise here. Yeah, go ahead. Sorry.
No, I was going to say, I mean, one thing that's kind of an extension of this is whether or not the Federal Reserve might have their own central bank issued digital currency, a digital dollar, because that would be part of the possible stablecoin ecosystem as well. But the Fed said in its report, it won't do this without explicit support from Congress. For you personally, would you support the Federal Reserve issuing a digital dollar?
Yeah, that's a great segue to what was going to be my third point, which is what I think of as geoeconomic risk. Right now, the United States dollar is the world's reserve currency that has tremendous positive externalities for us in the form of trade and our debt, and really in our financial leverage. Frankly, what we're seeing right now with the Russia-Ukraine crisis is that having the US dollar be the world's reserve currency is a real important geoeconomic asset. So the question is, how do we sustain and persist that position for the US dollar in the 21st century? Part of the answer there needs to be, we want to be standard setting for digital currencies at the international stage. Some of the arguments for a central bank digital currency have been, by doing a CBDC, we are better able to set those standards and we're better able to persist the US dollar as the world's reserve currency. I've got a lot of skepticism about that claim for a couple of reasons. One, doing the technical work about a CBDC, as the Boston Federal Reserve has already done, laying out the parameters for it, achieves that purpose of standard setting. We now are prepared domestically to go to the world stage and say, here's what we think these standards should be. So we don't have to actually issue a CBDC to have done our homework and be able to talk about it in a unified way. Second is that stablecoins can do a lot of the extension of the power of the US dollar that we think a CBDC would do otherwise. You don't need it to come from the central bank. It can come from other stablecoin issuers and have much the same effect of being a force multiplier for the US dollar. I was a tech product manager go ahead.
Congressman, I mean, it sounds like you are a little more skeptical around CBDC, specifically the Fed issuing a digital dollar. And yet, if you look across the world on the other side, you've got China rolling out the digital yuan, maybe not on the level that it was expected to during the Olympics, but it is already in circulation here. Do you consider that to be a risk?
We do not want to be following the Chinese Communist Party's playbook on either Web3 or the metaverse, the two big tech trends of the moment right now. What we have seen is that the Chinese Communist Party has really squashed any type of private sector innovation in Web3 and is instead trying to take it over at the state level. And as I said, if we're trying to be standard setters for digital currencies in the 21st century and use those standards to help promulgate the US dollar as the world reserve currency, we need to do the technical work to understand how a CBDC could work so that we come prepared. But what we really also need is a flourishing private sector ecosystem of stablecoin issuers so that we see innovation and that we see the dollar extended in multiple different ways that one central bank could not do. So I think the US approach has been much more thoughtful than the Chinese approach right now. Having said that, we need thoughtful stablecoin regulation to convince entrepreneurs to be working here in the United States, because right now there's too much uncertainty.
Massachusetts Congressman Jake Auchincloss, it's good to have you on today. Really appreciate the time and hope to have you back on soon.